Dear traders, hello ladies and gentlemen. Today we are doing another episode of the MCA Trading Made Simple series. We're going to talk today about the correlations between different currency pairs. Anyone, even the traders who are trading blindly, they must have figured out that certain forex pairs are highly correlated. For example, Australian dollar, Kiwi dollar. There's a lot of correlation between those two pairs. Euro dollar, pound dollar, there's quite some correlation between those pairs. Now, Euro dollar, dollar Swissy are almost completely negatively correlated. If Euro dollar goes up, Swissy tends to go down, and vice versa. Euro dollar, dollar yen, definitely some negative correlation. Euro dollar, dollar cut, definitely some negative correlation. So looking at that, you can literally distinguish the different pairs according to their correlations. And then you will realize that even though there are 30-40 different forex pairs, there are actually not that many if you take into account the correlations. Now, there are also other pairs, I call them cross pairs, like Euro yen or pound yen or Euro Aussie, which are different because obviously the input pairs already have a correlation. Or Aussie Kiwi. So there, these pairs move quite different as compared to the main pairs, the input pairs as I call them. Yeah. So why is it the case? Oh, surprise, surprise, here's the answer. Okay. The reason for that is nothing else than this, the dump money. And you will be able to observe that live if you have the MK web. Because Euro dollar is shorties, most of the time cable has some shorties. Euro dollar is shorties, most of the time dollar yen has some longies. That's why euro dollar goes up and dollar yen goes down. Okay, the correlation is a result of the market causality. Okay, this is important. The market causality leads to the respective correlation. Not the other way around, okay? It's very important to understand. This is how this works, okay? So let's look at some real life examples. Here we have Australian dollar on the day chart. And now let's look at Kiwi dollar on the day chart for the same period. You see, it's almost the same chart. Look at that. Almost, not exactly, but you get the drift. Yeah. Here we had the down move, up move. Here we had the down move, up move. Okay. The long downtrend in Aussie, the same in Kiwi. Yeah. So why is that? As discussed here, with the longies in the market goes down against the longies. Let's look at Aussie dollar, the same. Okay, with the longies in the market goes down. Okay, this is why we have the forex correlations as they are. And you get now for your analysis. Guess what? If we see longies both in Kiwi and Aussie, then you can be more confident that the dollar will get stronger. You see, you can compare the charts on the MK web of all these pairs, and that will actually improve your analysis and prediction skills. Okay. Now let's look at euro dollar on the lower time frames. Yeah, and now let's look at Australian on the lower time frames. So yeah, there is correlation. Not exactly, but there is some. You see? So here we had the range with up move, down move. And in euro dollar, somewhat similar, not exactly. Down move, up move, and range as well. So if you go to the pairs which are a little bit less correlated, the more you go to the lower time frames, of course, you will start to see differences. But this is a very good rule of thumb, okay? That means, let's say you want to place a trade in euro dollar, and then you analyze dollar Swissy, and you see dollar Swissy looks very bullish. There are loads of shorties. That means euro dollar most likely is bearish and will go down. You see? Not rocket science. So pay attention to these kind of correlations in forex. It's another aspect which gives you an edge. If you see, for example, that there are many longs in euro dollar cable, Aussie dollar Kiwi, you will know that the dollar will get stronger. It happens quite often. We had it recently. Yeah? Okay, so I think that's it for now. This is not the most complex topic. If you once understood really how the market works and you were able to see behind the veil like we do here, it all makes complete sense and you can use it to your advantage. Not very difficult to understand. Okay, all the best. We still have a handful of episodes to go. I hope you like this. If yes, please leave us a like, leave us a comment, post this to a friend of yours, and also get the MK web and start trading properly. Stay safe.